Here we are again, man.
Hey man, we
March
back.
March 5th, 4:15. Let's do this.
Hey man. Oh, these levels. Hey man, we was
money, money today. Most of them are really on point. So
yeah,
it was a short day for me.
we
Yeah,
was really on point.
I really only I traded a gold short and then two gold longs, and I called it a day, man. I was done before lunch. Got my workout in. Did some other stuff around the house. So I love days like that. I don't like to sit in front of the screens all day long if I don't have to. So it was nice to have one of those days. So good stuff. Good stuff. How about you?
Oh man, it was great. I took I went long, no, well, first short, goal, long, goal. I hit the nice short on oil we talked about yesterday.
Yep. Yep.
Um, I took a short. Actually, I took two shorts on ES, and then I took that long that was crazy. Ended up being the low of the day, and I went long there, and it skyrocketed up.
Yep.
So
Yep.
I
Yeah.
was pretty successful.
Excellent. Yeah. Like you said, there was definitely some good tradable levels that we pointed out yesterday. So hopefully a couple of folks caught that. So let's I think today we're going to talk a little bit about scaling in and scaling out. We've mentioned it frequently over the past week or so. So we thought we'd do a little deep dive on that today. Get you guys some definitions, what it is, how you do it, that kind of fun stuff. So let's go ahead and dive into that. So first off, let's start. What is it? Basically, it's the gradual entering or exiting of a trade. Instead of putting on a position all at once or taking a position all off all at once, you're going to gradually build that position with multiple orders, kind of stacking them together to form the overall position that you want to have. So why do we do it? It's a great way to manage risk. It can improve your average entry and exit prices. It helps you adapt to the various market conditions that are going on. And really, I mean, honestly, probably the best thing that it does, and I didn't put it on here and I should have, it's great for your mental game. When you're scaling out, you're taking some profits, put your mind at ease a little bit. You get those free trades then at that point, and it's easier then. It's not easy, but it's easier to keep that runner on so you can stretch those profits out a little bit. So for me, that's probably the biggest advantage. I think I did mention it a little bit later in this presentation, but the contrast then, I already said it, it's all in, all out. So you're putting your entire position on all at once, or you're taking it out all at once. I do a variance of both. It kind of just depends on the day, what the market type is, and I'll change that up a little bit, but I always predetermine if I'm going to scale in or scale out, and I'll talk about that a little bit as we go here.
Okay.
So why scale in and out? Again, reduces the risk of buying at the peak or selling at the bottom. It gives you that flexibility. So if something moves against you in the beginning, you can. Some people call this dollar cost averaging. You might hear that term. So you can dollar cost average a little bit. I don't love to buy into losers, but if you plan it out ahead of time, so you got a zone that's going on in a certain area, you can basically plan it out. And we'll get into a little bit more details on the next couple slides on exactly how the structure of these trades. The benefits of scaling out, again, I kind of talked about this. You lock in those profits incrementally. It helps you let the winners run. It mitigates that risk of the whipsaw coming back on you. We've seen a lot of that here recently with the tariffs. We get a tweet here or there, and the market can just make a sudden change to the other way. And yesterday was a great example of that. We saw some big time whipsawing action. So if you were trying to hold a trade too long at that point, you could have got caught in some of that. It could have actually turned a winner into a loser for you. So definitely something that can help out with that. And then again, I talked a little bit here about the emotions that balances your fear and greed and trade management. And that to me is definitely the biggest reason why I do it. So how do we scale in? So the first thing that you want to do is you want to be able to define what your total position size is going to be before you get into that trade. Whether that is a dollar average, or if that's a certain amount of shares that you want to have, or a certain amount of contracts and futures, you want to definitely have that defined before you actually enter the trade. Super important, or else you could really get yourself in trouble with scaling in. Most people will set a dollar amount, like for instance, somebody will say, I'm just using it as an example. In this trade, I want to risk $1,000. So you would scale in then to make sure that you're still going to have that same risk amount for yourself. So then what you do, you have your price levels that we give you, these support and this resistance stuff. Break that into increments. You're going to purchase 25% at $50, and then 25% as it moves up a little bit in your favor at $52. And then maybe as it moves up a little bit more to like 55, you'll put the rest on at that point. You're going to use those support and resistance levels. You're going to adjust if the trade trend shifts. Make sure that you're quick on the trigger to adjust it. I did use a little example there at the bottom, and this is more if the trade. Let's say you enter at $50. Got a little zone there. You're entering at the top of the zone, but it starts to dip a little bit more on you. You can buy a little at 48. And then buy a little bit more as it comes back up through. Something like that. It doesn't have to be all in one direction or anything like that. You just kind of average into the position. And again, I put the note here about dollar cost averaging. I see that term floated around out there a lot, and that's what scaling in is essentially. All right, how do we scale up? So it's kind of the opposite. You want to set your price targets once again using those support and resistance levels. Personally, I like to do mine in sets of 3. I'll do 33% at one point, 33% at another, and then I'll do the finish for a runner. People do it in all different ways. You want to set those targets so ahead of time. You want to know where you want to get out before it even starts. You don't want to be holding on too long either. So you want to watch the momentum of the trade. If you see something that's making it look like it's turning against you, don't get married to your idea. Don't be afraid to lock in those gains if you need to. So you don't want to wait for that perfect top and bottom. I can't tell you how many times that I've had trades go within one tick of my target and then turn around completely on me and come back. And I think day one that we did this podcast, I actually had that happen. And avoid that. And that, for your mental, that is like literally the worst thing that can happen, in my opinion, to me. Like when you see it go within one tick and then it comes all the way back on you, it's such a heartbreaker, and it's going to set you off for the rest of the day.
It does. Because you're looking at it and you're like, oh, I'm going to take profit, and you get froze just to watch it drop. And you're like,
and then you're like, okay, it's gonna come back for you. It's gonna come back for me. And you're like rooting it on. No, it's not gonna come back for you. Take the profit. Take your money. Get out, man. Take it and run. Or at worst case scenario, move your stop to break even if it's sitting there. Like, don't take the loss on that. That was a stupid beginner move that I made on that day. And as you can tell, it's still like bothering me right now. Like that's how long. Like it's just annoying when that kind of stuff happens. So make sure, don't wait for those perfect tops and bottoms because they don't come.
Right. And that's my rule now. Is if it's within, one tick of my take profit, I'm taking it. Like I'm taking it. I'm taking something. Like I'm not gonna let it go all the way against me and then be looking with my face wide open, like I can't believe I just did that.
Yes. And if you have the plan going in beforehand, it helps you to get out of that then at that point. If you're not, you just cannot be locked in. I think we talked about it a little bit yesterday when we were doing support and resistance. Mm-hmm. Those levels aren't a set number, like to the tick. I mean, sometimes we do hit them to the tick. Gold was a perfect example, but not always, not usually, honestly. You know what I mean? It's not usually to the tick. It's either going to go a little bit below, a little bit above. So you got to always keep that in mind. That they're areas that you're looking at, not the actual, dead set, black and white line in the sand or anything like that. So super important there. I did want to talk about how you can use these in the different types of trading strategies that you're using. So a trend following strategy. If you're scaling in that, obviously you're going to scale out at those resistance levels, the levels above, the areas where fear is going to catch in. If you're using mean reversion trading, and that's when you're trying to trade outside in, on like a balanced day, which we'll talk about, I'm sure, here soon. What a balanced day is, what a trend day is, how we can identify them. But if you're doing mean reversion trading, which that's what you should be doing on balanced days, you know, you're going to scale out as we're getting closer and closer to that mean average, which is usually, you know, something like a point of control. It could be a VWAP, maybe something along those lines. You're going to have some kind of target there in the middle that you're starting to work towards, and you're going to scale out as you're going towards that. Breakout trading is a little bit different. So when I say breakout and trend following, people are like, that's probably the same thing. It's not, though. Breakout trading is when we're breaking the new highs, or we're breaking the new lows that we've never experienced ever before. So gold's had a lot of those recently. We've seen a lot of new highs on that stuff. You know, I actually use Fibonacci stuff to get my predefined targets on breakouts, so I can figure out, at least have an idea of where it could stop. I have a really good level that I have for that, which I'll show folks here at some point as well. But if you're breakout trading, same thing. You know, when you have those predefined targets, you know, just make sure that you're getting out at those levels. Pros and cons, I've kind of already talked about this as I've gone through the presentation, but I'll hit it one more time. You know, it reduces that emotional risk, decision making. It's going to improve your risk reward over time, and risk reward is really what makes or breaks a good trader, to be honest with you. If you have bad risk reward, you're going to be a bad trader. It's just a fact. Sorry. You know, it helps you adapt to uncertainty. The cons are, you know, you're placing more orders with your broker, you know, so the commissions are going to be higher. You know, it requires that discipline, because if you're dollar cost averaging and it's going against you, and you're adding in and you see your average is going lower and lower, and you're like, okay, it's still not, you know, still not getting super far away from me, but guess what? Now your position size is getting larger than you planned, and now you're facing an even larger loss, and you're facing a momentum against you too. So it definitely requires, you know, it requires that discipline and that planning. The other thing, if you're scaling in, you know, you can miss a move pretty easily, or you might not have the position size on that you want because it never got down to that level where you wanted to complete the order at. So that's definitely a con. On the shorter term day trading, I think scaling in is a little bit tougher, in my opinion, just because the moves that you're looking for aren't huge normally. You know, you're going for those micro moves during the day. I think on a longer term strategy, it's a little bit easier to scale in my opinion, but scaling out is something you can do in any time frame, honestly, and it works great. Practical tips for success. Again, plan ahead. We've beat that dead horse. I'm not going to beat it again. Stay flexible. It's, you know, I think I beat that one as well. Track your performance. Know what's working for you and what's not. Adrian and I both journal every day. We track all of our trades. I have an automatic program that actually tracks every single click that I make for a buy order or sell order. And then I can label each one of those trades, and it shows me, you know, what my average wins are for that type of trade, or my average losses for that type of trade, what my average risk reward is. So track your performance. It's super, super helpful. And that gives you something, you know, hard data for you to make changes. If you're not having success, that's the only way you're going to figure out how you can change it, is you got to have that data tracked, and then you have to have set rules that you can then change on the fly. So helps with your risk management, you know, and then also, you know, the tools that you can use for it. You want to use limit orders for this kind of stuff. You can set some alerts. TradingView has some good alerts that you can set. I set them every day, you know, for the first levels that I'm watching to get broke. You'll hear those things going off all day long at my house because those levels are getting broke here and there, and all night long, unfortunately, because sometimes they break at night. So my wife loves it. Common mistakes to avoid. Obviously, don't chase the market. You know, if you're scaling in too late after the big move, you know, you're probably going to get caught on the wrong side of it, especially day trading. You know, you're seeing a lot of ups and downs that are happening throughout the day. If the market moves without you, let it go. There's going to be more trades that are coming. I mean, it's probably the best thing you can do for that, you know. Don't overcomplicate things. You know, you're working with all these different levels. You're thinking of all these different price points that you want to get in and out of. It does make it a little bit complicated, but, you know, try to have that set plan, know what you're doing. Don't make it too crazy for yourself. Don't ignore the stops, especially scaling in once again, because you're building that position size bigger and bigger and bigger, and so your loss is going to end up larger than you wanted. Emotional exits, the panic selling, panic holding, all that fun stuff. Try to avoid it. Conclusion. So scaling out, in and out, discipline, flexible way to trade, balances out that risk and reward. What you guys could do, you can start small this week. Start on those micros. You can get many contracts on there. One ES contract equals 10 micro contracts. So, you can get a good contract size there, a good bundle to work with. Or start with some smaller stocks with the lower price to them. And adapt the news as it comes. We're getting tariff stuff. We had the beige book today that moved it a little bit. We'll get Powell talking here and there, FOMC type stuff. Pay attention to the news, know what's coming. Oil, you get your weekly oil reports on Wednesday, that kind of thing. Gotta know when that stuff is. Pay attention to it. It'll help you out with this stuff. So, anything you want to add to that, Adrian, at all? Anything I missed?
So I'm trying to think. So I know one thing, especially with the discipline and just thinking through the process. One thing that really helps me, we talked about journaling a little bit. I actually not only journal my trades, but I journal my mindset throughout the trading, hours when I'm trading. So if I'm looking to take a trade, I'm actually journaling, like, what am I seeing? What am I thinking? How do I feel about this trade? Does it line up with, everything that I typically do, my strategy, making sure that I'm not just jumping out the window with trades. So that's just a little bit piece that you can add. And we can definitely deeper dive in that. I do feel like that's probably more advanced.
But that we could actually do a whole segment on journaling and trade tracking. To be honest with you, I'm thinking about it. So we'll get to that one for sure at some point. And all those books that Adrian went over, not all of them, but most of those books that Adrian went over, a few days ago, most of those are mental trading game type things. So they'll talk about that in those books almost for sure. Actually, I know they do because I read most of them. All right, let's dive into the markets a little bit. Let's see what we got going on.
Okay.
So I'm a little bit more prepared today. I actually have my real chart up here. So we're going to start on the daily on the ES. So once again, we're playing around on this 58.10 level. We got the penetration yesterday. We did drop below it again today, but notice we did make a little bit of a higher low there. So maybe buyers are starting to climb the wall, worry a little bit here. To be determined. We'll see what happens on that. Definitely want to try to keep it above. We don't want to see any closes below this 58.11, I don't think, on the daily, or that'll probably trigger the next cascade of selling here to come in. Then you're looking at this 57.25-ish area. And then, of course, we have the open gap down here at 56.80, which could probably, there's a decent chance that might be the ultimate target of where this down move goes, just because it's so close now. Definitely wouldn't be shocking now if we get down into this area. And then maybe try to start to bounce from there and recover. We'll see. A lot of it's going to be news dependent, I think. As far as the bullish side, when would I get long again long term? Yeah. I think I'm still keyed in on this 59.24 for sure. And even that's aggressive. For me, even though you're going to miss a lot in here, I don't think long term I'm getting bullish again really until we get back over this 6,023. I know that's a long ways away. It seems like you're missing a lot, but with the triple top here, we broke down a little bit. We have a huge uptrend. There's a gap below. There's just a lot of bearish things in tariff talks, trade wars, China wanting war on any front we want. I mean, there's a lot of risk right now that's happening. So, I don't think I personally want to get long term again until we're back over this 6,028 area. How about you on the daily? Anything Anything on the daily that you have that I don't?
No, not on the daily. I think. Let me see. Which, of course, some of our old levels there. Nothing. No, nothing new. Honestly, because I mean we're just kind of playing in this area. Yesterday, I mean it's pretty much inside of yesterday's range.
It is inside. Yep, you're exactly right. Look at that. The candle's smaller. So yeah, we had an inside day.
Yeah, we had an inside day. So I'm really looking, outside. To be honest, hopefully we push up since we're closer up. Then that'll make me a viable player as we're starting to go back up. But I mean, as you see, we've just been playing along this. What is this? 5882.
5800. There's a lot of that was a big level for the options folks. So I figured we'd probably get a little bit of back and forth here.
Yeah, this 58, 80, 80 area, give or take up there. We seem to have not been able to really break and hold that.
Let's zoom around a little. Yeah, that's 58. Yep, 58.84. We talked about that a little bit yesterday. And again, that's
yesterday.
For shorter term, I think you're right on track there. Intermediate level, maybe on a swing trade if you want to get super aggressive.
I think if we break that area, we should then get that nice little push up to 59, 25 area up there.
Yeah, yep, so. I agree. Yeah, and I think on a day trade or maybe just a quick swing trade, not bad. But as far as the longer term stuff, I'm not looking at that.
Yeah.
But on this 2-hour chart, let's see what we got.
But yeah, let's see.
Thinking on the downside, we'll take that guy out. This little tail here is so close that I'm just going to leave this 57.43. So that'll be my bearish level that I'm watching tomorrow. We'll take that out. That was the overnight high. We did penetrate that later in the afternoon. But again, on the upside, you could get super aggressive and maybe try to go with the high of today. But we got another little peak not far off right here. And then, of course, we got our 58.84 level that we've been talking about here for a couple of days now. So for me personally, we got a nice double bottom that's forming, a little W. See the W happening. So if we get above this, you got a lot of shorts that are probably trapped from this move here. So like Adrian said, the push up to 59.29, 25, 29 area. It's pretty likely, honestly, if we can get above this 58.84. So there's a really nice trade sitting there. So we'll see what happens. Let's zoom it down a little bit more into 30 minutes, see if we're missing anything. One that's sticking out right away. I mean, we could do an aggressive short here since it's sort of a bearish type.
If you want to be aggressive, I have that area marked. Once again, if you want to be aggressive, it just depends on how aggressive you want to be.
Absolutely.
So I don't.
And the other thing, we're kind of falling back. See, we got the peak right here, the W. We're sort of falling back into that consolidation then at that point. So it's not a bad trade, honestly. If you're going to take that, you're going to pay attention to 5,800 down here. There's 3 bottoms that happen there on the 30. If you look, 1, 2, 3. So probably something in that area, maybe short down into that zone. That would probably be the play, in my opinion. What do you think?
Yeah, I like that better. So yeah, 57.98. I like that area.
So you got a good 30 points in there, roughly, that you can take.
Yeah.
So not bad. That's a good trade. For the daytime, that level could get broke overnight. We'll see what happens. There's probably no overnight activity for me on ES that I'm seeing right now. I don't think. I think I'm probably gonna take the night off.
Yeah, I'm taking the night off for sure.
All right, let's go ahead and let's look at oil. We actually had some good action on oil today. Surprising for me, I got to be honest. I thought with the oil report, it may have leaked early. I'm not sure. The move started before the report, which is kind of odd on a Wednesday. I usually really cautious with oil on Wednesday because you get the oil report at 10:30 every single Wednesday. We had all these little Bailey bottoms that are down here, so I thought we'd get a little bit of support. We kind of did, kind of didn't. I mean, we did come down to this level that we identified at 65.30. We said if that broke, we'd probably come down to there. It did. Bounced there, and now we're going to play around probably in this area, at least for a little bit. Man, I'll tell you what, though. This whole large, if I can get it, whole large consolidation, what is this thing that goes all the way back to February of 2022, if we start to break down from this at like 62, it could be a nice washout, honestly. Like, there's a lot of orders that have happened over a 3-year period in there. So, gosh, I mean, I could see it's around $50 if we break that easily. You know what I mean? Like, there's just enough build up and pent up energy in there that I think you'll start to flush. And there's going to be a lot of people that are looking at these levels thinking the same thing I thought yesterday, that they're going to hold. And if they don't, you're wrong. And then they're going to have to turn those positions into sells, and boom, down it's going to go. So I think there's some potential maybe coming up for oil on the downside for a longer term trade. If we can start to penetrate, first we got to start with the 65 area, then we got 63 below that, and then the big one will be this 61, almost 62. So if that goes, we could see a really nice move on oil. That would be fun. I hope we do.
Yeah, sweet trade overall. I mean, I text you. I took the short off of 66.78.
Yep.
And it took a while for it to really, really break down. I was like, oh, here it goes. Once it broke 66.50, but then it kind of rebounded a little bit. I'm like, oh, it's taking forever. And eventually it finally broke. And I was like, okay, sheesh.
Yeah, if we look at like let's go to like a 10-minute trade. You can see it sort of played around at that low. See how it bounced once, and then we came back through, and then it sort of wanted to hang around up there a little bit, and then finally sellers are coming in hard. Buyers gave up. Down we went. So let's go back to our 2-hour real quick. Set some levels here. All right. So for me, areas of interest, we'll keep this 68.59 on there. We will change the overnight high to an actual level. It still gives us about 40 cents to play with, which I'm fine with. 40 ticks. Let's zap this guy out. I don't think we need it. It's not really a breakout zone any longer, but look what's happening right now. We're coming back up to test our breakdown area, just like every single day.
Yep.
And then boom. So we'll turn that guy purple. This one. We'll take that out for now. We can make a really aggressive long play. Let's go to 30 just to see. Got a couple little peaks there. So this would be super aggressive. This is probably one of those that I wouldn't take, but a level that I will point out for folks. If you're interested, the odds are, we're sort of working down here. I can see it popping up, coming into this zone again, maybe testing 67 from the bottom, come in a wee little bit, and then maybe resuming the selling. Definitely something that could happen there. Or you can see on the flip side, we come up a little bit, get to 67, come back down here, retest this 66.53, and then off we go back up to the next level. So couple options there of things that can happen. Neither one would surprise me. And then obviously on the downside, we want to keep an eye on the low today. So it's around 65.25-ish. Give or take a couple cents. I don't think I could hit that exactly right on there, but I'll correct that later. So yeah, bear side, I want to see that break. We'll see what happens overnight. Maybe we get a little chop around here, like an overnight low around 66. Maybe we'll have a new level for tomorrow that we could put down into there. But the overnight will sort of determine that a little bit for me. How about you? Got any addition? Oh, I just need one other level. Sorry. This is an interesting 67.25. So we could get that bounce up here, come through this bottom, and I can see us really running into this headwind and then heading back down the check. And that's probably the most likely path. I got to be honest with you. But we'll see what happens. What do you got to add? Anything? Any
Okay,
additional?
let's see. You got what's that? 6624 area.
6724.
6724. Okay, I have that.
Yep.
All right.
Yeah, we got 1, 2, 3. We almost got four tops there on the 30-minute. So it's definitely an area of interest.
Okay.
We're selling it over and over. And that was in the morning.
Okay. 6777.
Yep. Area. That would be our re-entry.
Yep.
So that was our breakdown spot. So you know how we love to test our breakdown areas. So that's what I got that one there for.
Okay. Just making sure looking.
Yeah.
Yep. I guess I'm trying to see, I guess if you want to, do you have, I guess if we was to hold this area, it's kind of, it's tight. And you would literally have to play it like as soon as the market probably opens back up again. But if it held over 6622, that I don't love it, but I could see if we held there, the push up to possibly.
And you could even argue a short there, maybe like
short there. It holds, go long to that 6678 area we have
like
there.
Right around here. Yeah. I mean, you could definitely an option.
Yeah. I mean, it's tight. I don't love it. So like I've said multiple times before, that would be an area I would just be watching more or less than taking a trade off of. It would give me an indication of kind of what the market's looking like, and if we're going to kind of get this pushed down here.
Yeah, I think we'll see what happens overnight. I think overnight will really determine what tomorrow is going to bring for oil tomorrow.
Sounds good. Okay.
All righty. Let's go look at the gold. The old shiny metal. All right. So, again, we talked about this a little bit yesterday. We had the fake breakdown that happened. We had the rebound the next day and then a little continuation. So we sort of moved back into a bullish stance at that point. As far as daily levels, obviously all eyes are now on that old low here at 28.43-ish. So if we drop below there, I'm not going to say anything's guaranteed in trading, but it's very, very high probability then we test this open gap that's right here if this does break. But we are back bullish now, so I think the odds are probably higher that we go now and test the 29.74 all-time highs. Let's zoom it in a little bit because I'm going to point out a couple of things. So yesterday we sort of talked about this level right here. And I think I mentioned 3 or 4 times that this was a buy level for me. And it certainly was. It did exactly what I wanted it to, honestly. It came down, broke this level just a little bit, and then started just rebounded from there. And after that, I mean, you're talking almost $40-something up from there. So 400 ticks. So you could have got in at many different points. I traded this little move twice throughout the day. That's like I said, this is where I made I made all my money right here. I made it on this drop on the break of the overnight low, and then I made it on the rebound. So I made it both ways on this one.
Okay. I took the long and then I took the short. So I actually took the short at
this one?
At the top. Yep.
Yeah, I mean, again, that level held very nicely. Even our 29.33 got some play. Look, I mean, there's a 30-minute candle here with a nice rejection, so it wasn't ignored by any means. It just broke again, at that point. So, you could have made money there on a short. Could have made money up here on a short, down here in the long. A lot of options that you could have did with some of those levels that we had set yesterday. So for tomorrow, zap out the purple since we've already retested that area now. This becomes now a bear zone for me, so we drop below there. Probably looking for it to drop into this area 28.95. Could drop into there. There's another little level here. So actually, and I'm gonna make this small. Because I wouldn't use this for a short trade. I would only use that as a target. If you broke this, you start coming down, that'd probably be the area where it'd be between this 28.95 and 92 is where I'd be looking to get out. So that's where I'll mark it on the chart. Other than that, we'll leave as is. If we go up a little bit higher here, if we're trying to get aggressive on the bear side, we could look at 29.20. If we get a breakdown from there, then we're probably heading back into that 2,900 area. You would also be in a situation where it'd be a fake breakout on this level. So there could be some bottom side momentum. So there's a legit trade there, definitely, if this breaks. Keep an eye on it. Just because of this structure where we had, the fake breakout that happened at this one. So see what happens there. On the upside, obviously 29.42, we're going to leave that one in place as is. No changes to that. But we will have a little look here at 29.32. Kind of tight to where we're at right now. I don't really love doing stuff like that. Again, this would be an overnight type trade if you did it. Not something that I would take, but this is a legit level that'll probably get some kind of action tonight during the after hours. I
have it. I have it as well too. I don't love it because we're just right in this area. It would be something that I would definitely be looking for, depending on where we were during the day session tomorrow. Then overnight. I could definitely see a nice little pullback right there, though, possibly happening.
Yeah, tonight I could definitely see that. So we'll see what happens.
Yeah,
I'm not. Again, I don't think there's anything I'm super interested in tonight, so it'll be an off night for me. Good, I need it. We'll let all three markets kind of marinate and adjust what's happened today. We'll set the overnight levels when we come in tomorrow. There might be some good moves off of that, and we'll go from there. Make our plan, stick to it, and go about it. Is there any other stocks or anything that we want to look at? I did have somebody ask me about XRP earlier today.
Okay.
So I looked at it a week ago.
I know that's getting a lot of attention lately.
Yeah, so let's just kind of zoom out a little bit on it.
Ooh.
So, crypto. So it's had a nice big run up, and I told the gentleman today that he's a longer term trader. So my advice is probably to watch these two in this consolidation area that we have. Big, huge tail there. Obviously, buyers came in hard at that point. That was on February 3rd, so it was a while back. And then we got the pop from the Trump talk about the crypto reserve, and XRP was included in that. So we got that pop, but then they sold it. So there's still some confusion going on this. It's been a huge consolidation, essentially. If you go all the way back to December 2nd, this is all just one big consolidation zone. So this bottom and this top are going to be your key areas that you're going to want to watch on it. If we start to break out here at the top, you're probably in for a decent move just because of how long this consolidation zone has been going on for. And then on the flip side, if we start to break down here at the 178-ish, let's call it, you're probably going to get a nice washout. And there really wasn't a lot of structure that happened throughout this. You'll probably get a little support around this area at 1.417. There's probably a POC there, I'm assuming. And then same thing down here at 1.1. So you might get a little support there if you're looking for targets on that. Those are probably some decent areas to maybe take scale out a little bit, take a little load off. And then on the upside, let's see if this works out. Look at that. So this is the first time it broke out. So then it breaks out again. It goes right to this 23.6. This is money on breakouts. I love this. So, but let's go ahead and look at the lat. Whoops. Sorry about that. Wrong button. Our last little, that's been broke to be downside though. It's a tough one. You'd probably look at like this 3.7 area for your first target. Maybe scale out there, especially if you've been in for a little bit through any of this mess. That'd probably be a decent spot. But I think if it breaks to the high side and it breaks out, come back down, starts to hold this area. I mean, again, you got months of build up here, so you're probably going to go much higher than that. You're probably looking at this, probably around 5-ish would be my guess, to be honest with you, where we would sort of end up at. So something to keep in mind on the XRP if you're trading to crypto and you're interested in that kind of stuff. Just a quick longer term overview there. I'm not going to dive into the day trading aspects of XRP or Bitcoin for that matter. So, all right. Anything else we want to look at today? I want to call this an episode.
Guess we're gonna call this an episode. Yeah.
All right. Time for our 10-second awkward delay here at the end then.